Hey, welcome back to Insurance Test Help. Just a real quick word for me. I am just past my 1 year mark here on YouTube, and I just wanted to say thank you to everyone here on my channel. I really thought when I started I might just have my husband and my son as my followers. So I really appreciate all of you and really all your kind remarks. So today we're going to do commercial insurance. I had somebody ask me if they needed to even worry about commercial insurance for their P&C exam, and just wanted to point out that yes, you absolutely do need to do some stuff on commercial insurance, or you're leaving a lot of marks on the table. It is the commercial policy on most states is 10%, the business owner policy is 8%, and then they bury commercial auto and the commercial umbrella in other categories. So you are leaving probably 20+% on the table if you don't do any commercial. So let's get into it. You don't want to be starting at 80 as your top end, right? So let's start at 100% and then have all the marks we could possibly get, and just work on doing the best we possibly can. So let's get into some of the key tricky parts on commercial insurance for the P&C exam. Here we go. So most people understand kind of the concept of businesses, but it's important to understand for this that there are lots of different kinds of businesses. There's your little tiny little sole proprietorship, your one-man band kind of thing. There's partnerships. There's corporations where they're incorporated. There's also your S-corps and your LLCs. So those are sort of your more businesses come in all different sizes is kind of the moral of this story, right? So commercial policies have to be able to fit all different sizes of businesses. Okay, there are two really common parts of commercial insurance policies. One is your basic CCP commercial insurance policy. The other one is called a BOP business owner policy, kind of a prepackaged. The commercial insurance policy is kind of like you make your own policy. Different kinds of things. Think of it like a puzzle. You put together your own pieces of the puzzle to fit your type of business, and it's kind of like a build your own policy. So that one is for most businesses, but sometimes it's a little bit too complicated and too expensive for small businesses. So for those small businesses, you have the prepackaged policy that kind of comes as all in a box, includes everything for small business owners up to sort of medium small business owners. That is a lot of what you'll be selling unless you're going to specialize in commercial insurance. So it's really important to remember that just like all of your other things on the P&C exam, it's going to include all the legal parts of the contract, right? Legal purpose, competent parties, nobody can be underage, nobody can be drunk, nobody can have dementia. It's going to have offer and acceptance. It's going to have consideration and all of those other things that are parts of the policy. I'm not going to go into all of those. Make sure that you understand all of those from the other videos or your pre-licensing exam if you're in a pre-licensing state, because those are still going to apply for commercial insurance. So we do not need to go into all of the details here, but all of those things still apply to a commercial contract, just like they do to a personal contract for your homeowners. There's still going to be offer and acceptance. There's still going to be all of the legal ramifications of a policy. So you're still going to have a deck page. You're still going to have all of those things like you would on a regular property and casualty policy. The other thing with the commercial insurance is you have to remember that your exam is going to focus on civil law, not criminal law. So your civil law is going to deal with your disputes, your lawsuit by private parties, a burden of proof, liability. So keep in mind when you're thinking of questions about who's at fault and things like that, like anything, not just in commercial stuff, but everything, think in terms of civil law. Think of a lawsuit more than going to jail. So think of who's hitting who in a car accident, who's suing who in a business policy, because that's where they're thinking from. They're thinking from, and we'll get to that when we get to the commercial liability. That's why I'm bringing it up. If you put your mindset in that civil sort of liability, it helps you to get there that's where they're thinking with the exam. It's more about the lawsuits than it is about the crimes, okay? The only crime you really have to really focus on for the exam is obviously for fraud, right? But so there'll be some fraud questions. Don't forget those. But when they're talking about liability, make sure you're thinking about lawsuits, all right? Because there's a lot about civil law, all right? Okay, here we go. Okay, so one of the big things of commercial policies is obviously commercial general liability. Businesses are always trying to protect themselves from being sued. There's always somebody trying to sue a business, whether it's fraudulently or because they really have a claim. You know, people get hurt by businesses justifiably, where the business hurt them and the business owes them money. And then there's people that are trying to just get over. So businesses need to protect themselves from fraud claims, but also they need to protect themselves from actual claims where something actually happened. There are also commercial property, commercial crime policies, inland marine. There's going to be a lot of questions on inland marine. There's a little bit on commercial auto. There are some questions on equipment breakdown. And there is not a lot of questions on farm coverage. There are some questions on what things are not farm, what does not cover farms. Farms are not included in. So make sure you know some of the things where farms are excluded. And you need to know where you need to know a lot of, basically in this section, the big sections are going to be commercial general liability and inland marine. And inland marine and equipment breakdown, there are a few things. But inland marine is kind of a hidden one because there are a whole lot of different things kind of buried in there. So those are going to kind of come along. Let's get right into some of the different pieces, okay? So first, let's understand that this kind of package, the regular commercial CPP package, can be modular. You can have one or two different parts. So you can have a commercial crime package with a CGL package with your commercial property package. Maybe you just need the 2 or 3 different parts. Not everyone has all those parts. A lot of people aren't going to have a farm shoved in there, right? So I had one customer that had a BOP, and they just needed a BOP and an inland marine package. So they didn't need 2 or more parts. They just needed one thing. Some people will need the commercial property. They have a small business, maybe a gym, and then they have a umbrella. That's not one of these. And then they have some other part of this package, like crime. So there are people that just need modular parts of this piece. So this is for businesses that need modular coverage. Some people just need monoline. Like I mentioned, the customer that just needed inland marine. You can write CPP packages as a monoline policy. Anything where it's just one coverages, remember that is monoline. So there will be a question asking you about monoline. Don't know why they want you to know that language, but for some reason for the test they really do. So make sure you know that anything that's just one coverage is monoline. For your business owner packages, this is your small business prepackaged policy in a box. Includes all your things. It is for small businesses. It is for apartment buildings no more than 6 stories. That may be on there. No more than 100 square feet. I think the 6 stories will be the question if there's an apartment building question at all. And if there's any other question, it could be that restaurant, up to 25% of gross sales from beer and wine, and retail no more than $6,000 in gross revenue. They may also, some states have a restriction on gasoline sales for convenience stores. So know the rules for business owners policies for your state specific. So make sure you know your state rules, because a lot of bars are not eligible for business owner policies if they sell a certain amount of booze. Manufacturers, large business, self-storage, amusement parks, car dealerships, a lot of places like that are not eligible for getting a business owner policy because their requirement coverage, especially their liability, are unique to their place of business. On your commercial property insurance, they will cover two different kinds of losses. Make sure you know both. They will both be on there. Direct losses are property damage such as fire, the building burned down. Indirect losses are your loss of income while your building is being rebuilt. So obviously if you own a restaurant, you can't be serving people while there's no restaurant because it burned down, right? So the actual restaurant being burned down is the property damage. The loss of income while the restaurant is being rebuilt is the loss of income. So know your direct and indirect losses. So remember, when we're talking about property, we're talking about real property. This is land, improvements such as structures and permanently installed fixtures. Since land is not something you insure because it's still there after your place burns down, we're talking about those improvements, your buildings and your permanently installed fixtures. So even people who are tenants that are renting from a landlord will have property that needs to be insured. Think of a beauty salon. They're renting from a tenant that owns the building. They still have fixtures, the chairs, the sinks, things they installed that are unique to their business that need to be insured in case their business was destroyed. So just because they don't own the building does not mean they don't have any property that needs to be insured. So keep that in mind when you're doing your exam, but also when you're actually writing the policies later on. Okay, this is one of those overlap things between your regular P&C and your commercial P&C. Vacant and unoccupied. This will be a question for your exam. Make sure you know the difference. Vacant means you have no personal property and nobody lives there. The house, like you see those houses on Zillow, there's not a single thing in there, completely empty. The people have already moved out. The place is for sale. It's just like nothing there. Unoccupied is more like the people are on vacation, right? There's just nobody there right now. They might be away for a few weeks. They might be somewhere, but their stuff's there. Someone still actually lives there, just not at this moment, right? Know the difference between vacant and unoccupied. It's very important, and it's very important for commercial insurance. We're coming up on that. Here is the vacancy question for your exam that is 100% guaranteed on your exam. Write it down on some sort of post-it note, sticky note. Take a picture on your phone. Make sure you know this. Vacant for 60 days or more. A building that is vacant for 60 days or more is not covered for glass breakage, water damage, vandalism. That's like your little spray painter guys. Theft. I don't know what they would be stealing because it's vacant. Nothing there. Copper maybe. Sprinkler leakage, unless they've taken all the measures to prevent the freezing from the pipes or whatever. I think the question is going to be about glass. I will almost guarantee it's about glass. So keep that one in mind. Put that in your for sure notes. A building that is vacant for 60 days or more is not covered for the following. And make sure you really know glass, because I think the glass is going to be the question. Okay? Okay, remember we talked about direct and indirect losses? That was the direct losses part. Now we're going to deal with the indirect losses part. How do they determine your indirect losses? This calculation will be in your pre-licensing testing stuff. Remember, you should be taking a pre-licensing course. If you're in a state that doesn't require it, I still recommend that you take one. I still recommend that you work on one. It is the best way to pass the first time. If you're really on a budget, you can really do it without it, but it's going to be really hard. So if you because you're going to miss some of the state-specific stuff. So business income is net profit or loss before taxes plus your normal business operating expenses, including payroll. So make sure you understand that to get to your what business income is and what they're going to use to calculate your business income for calculating those indirect losses. I don't know if you'll see the calculation question on there, but I will be pretty sure you'll see this question on there. How long is the waiting period before you will receive business income insurance? 72 hours. I think it will be hours, not in days. Know that it is a 72-hour waiting period before business income insurance kicks in. Make sure you write that down. 72 hours waiting period for business income insurance to kick in. This one does not specifically go with business income. It goes with all commercial policies. The insurance company has the right to inspect at any time the policy is in force and up to 3 years after the policy ends your books and records. Most commercial insurance policies are auditable, so they want to see that how much money you made. Because that's what your often your commercial insurance policies are based on, is your how much your company is worth. So, because they're paying your business income based on what your business makes, right? So, didn't really know exactly where to put this one, but it kind of does go with business income. So, just know that one. You probably will see this one on your exam, that they do have the right to inspect your records. You may not see that as the 3-year one, but just know that they do have the right to inspect your records, and do know that it is for up to 3 years after the policy ends. Okay, let's get into commercial breakdown insurance. This used to be called boiler and machinery insurance. This is for things you have at your factory that can cause everything to go down. So things like boilers, things like furnaces, things like machinery. Think of a factory that makes something like, I don't know, think of like something where they make meat, or think of like a grocery store where they have freezers, or something like that, where if that freezer or that heating system went down, a whole bunch of stuff rots or goes bad or can't function, right? So they insure it to prevent all of the damage and spoilage. So I think what you're going to see that it covers is it covers utility interruption, it covers spoilage, it covers direct damage. It covers expediting expenses of getting parts and equipment there quickly. What it does not cover, and this could very well be the question, so make a note of this one, it does not cover wear and tear. This is not just you not fixing your machine, right? This is your machine having like they're getting zapped by lightning, right? Something like that, and your whole factory goes down and rots all your I don't know, meat that you're making, something like that. That's what it's really for. Commercial crime insurance. Some businesses are more susceptible to this than others. Some don't cover this at all, right? Depending what your business is. Think of a hair salon. Would they actually need this? They might not, right? Because they might not have a safe. They might not have burglary. They might not have to worry about employee theft. But then think about a bank, right? Or like a Costco, where there's just millions of dollars of stuff, or a grocery store even, where there's just like, if you have people stealing stuff, it's just going to add up really fast, or like a Macy's. So, places like that are going to have employee theft coverage. They're also going to have, burglary, safe burglary and inside premises robbery for all of the little shoplifters. They're going to have outside premises robbery for people stealing, stealing stuff off the building. They're going to have theft of money. They're also going to have people stealing stuff electronically, like banks, or people have stolen things. People have just broken into their systems and stolen stuff. Like think of computer fraud and data breaches and stuff, right? Like think of like Target when they had that big, huge data breach, stuff like that. So those are think of those kind of policies. So some small businesses may choose to self-insure that themselves because they just don't have a lot of exposure to that. Other businesses, lots of exposure, they need a crime policy. One thing, whether it's a personal policy or a commercial policy, know that crime policies do not cover mysterious disappearance. So that is one thing you have to know. Mysterious disappearance is going to be on your exam. Know that your homeowner's policy doesn't cover it. Know that your commercial crime policy does not cover it. Mysterious disappearance is not covered. So you have to have evidence that there was a crime for there to be, to be coverage. So know what mysterious disappearance is, and know that it is not covered by crime policies. All right, let's touch on umbrellas real quick. Umbrellas sit right above everything else. So you have to have the underlying coverage, whether this is your personal umbrella or your commercial umbrella. It doesn't matter. Your umbrella sits above. You must have the underlying coverage in order to have an umbrella. So you have to have the general liability policy, the auto policy, the employer liability, the liquor liability. These are all your commercial ones, of course. If you have a personal one, you would have to have your homeowners, your, whatever, underneath, your boat owners, before your personal umbrella would kick in. You can't just have an umbrella, right? It has to be the underlying coverage, and then once your underlying coverage taps out, then your umbrella kicks in. So just understand how umbrellas work. Once the other one taps out, then umbrellas come in above that and cover you. This is going to be the question, or at least one of the questions, whether you're talking about a personal umbrella or a commercial umbrella. Know what a self-insured retainer is. It's either going to be self-insured retention or self-insured retainer. It is similar to a deductible. We all know what a deductible is, right? We're paying our health insurance or car insurance. Deductible is the amount we pay first before our insurance kicks in. Self-insured retainer is the amount that you have to pay before your umbrella kicks in. So make sure you understand self-insured retention, self-insured retainer, because that is going to be, I will almost guarantee it, one of the questions with umbrellas. Okay, and here's the big one, commercial liability. So CGL is a big reason why people buy commercial insurance. They want to protect themselves from all of the lawsuits that come from owning a business, potential product defects, right? People get injured by our products either through poor product design, people using it improperly, all kinds of things, conduct of employees, and just other things. So sometimes just from owning a store, the store where my husband works, people fall, whether they fall from the floor being slippery because it just rained, which I think can happen, or whether they fall because they're trying to create a condition where they know that they can maybe shake the place down. So there are people that are sometimes trying to fraudulently shake down businesses, and sadly, and that is one of the reasons why you want to have very good commercial liability insurance, because your insurance company will handle the real claims and the fraudulent claims for you, and you do not have to drain your bank account on all of the lawsuits trying to ferret out the real ones from the fake ones, and paying these and paying those, and just paying a lot of lawyers. So all of these things help for your business. So also your conduct of your employees. Not everyone knows how your employees will behave, and you think you know your employees, but you can't know for sure, right? So sometimes your employees do things that you were not expecting them to do, and your liability insurance can protect you from things that were perhaps unexpected. Okay, one more thing to remember, that commercial liability policies have per occurrence limits and aggregate limits. Per occurrence limit, this is just an example. These are not necessarily limits on all the policies. An example might be that the per occurrence limits is $500,000. The aggregate limit might be $1 million. Some of these, it might be $100 million might be the aggregate limit. Who knows, right? Big policies. So these are just examples. But in this example, the per occurrence limit would mean that every time something happened, you would have a limit of up to $500,000. But your limit for everything would be $1 million. So once you hit $1 million, that would be it for the year. So keep that in mind when you are doing these. There will be a question somewhere, whether it's workers' compensation, general liability, somewhere there will be a question about aggregate limits. Okay, so just keep that in mind so that you are really familiar with them. Commercial liability or any liability works is that the insurance company indemnifies you for damages to a third party. Third party sues, and the insurance company steps in and indemnifies you protects you, right? So makes the third party whole again, and protects your assets. So remember, you need to understand very clearly indemnity. That is one of the key definitions. It's in a lot of our videos on P&C. It's in our glossary. If you don't understand it, please download the glossary. Please watch our general insurance terms. Understand indemnity backwards and forwards and how it makes you whole. Because in this case, it makes the third party whole, but it also indemnifies you, the insured, by making sure that third party doesn't mess with your business. The insurance company takes care of you. Okay, there are several different types of damages in commercial liability. You can hurt somebody, bodily injury. You can mess with somebody's stuff, property damage. You can also have personal and advertising injury. You can say something that's not cool about somebody, right? You wrote something nasty in an ad. You can also have punitive damages. That's where you're being punished extra for something you did beyond what the compensatory damages are about. Anything with liability, I want you to slow down. Slow down and read the full question, read the full answer. Understand that personal liability, professional liability, and commercial liability are all very separate and distinct, okay? They're all going to be on the exam, but they're all different. Personal liability and professional liability are not covered by commercial general liability policy. Quick refresher, they are in other parts of the exam. So personal liability is things that, like, your dog bites somebody's face off. You are responsible for that. Professional liability is you're an insurance agent and you screwed up someone's policy and they're suing you for errors and omissions. That is professional liability. Yes, you can be sued for them. Yes, they are liability. They are not covered by commercial general liability. They are other types of liability and they are insurable under other policies. For all liability, you need negligence. Negligence has a proximate cause. Proximate cause is that there has to be an unbroken chain of events. So you have to have like a series of events. This happened, that happened, that happened, that happened, and they led to the injury, right? So let's use a flower shop as an example. Flower shops know that they spill water on the floor. Obviously, flowers come in water. They know that they have to mop that up. They saw it was on the floor an hour ago. They didn't mop it up. Customer comes in. Customer slips. Customer falls. Customer breaks leg, right? Negligence. Yes, because you saw it. You knew. Thereby, you had a failure to exercise a reasonable standard of care, and that caused the injury. Know the difference between ordinary negligence, the failure to use reasonable care, and gross negligence, which is the willful and reckless disregard. The difference between ordinary and gross negligence determines a lot of things. Compensatory damages in commercial liability claims. Consider these kind of like reimbursements, okay? Medical expenses, lost income, property damage. There is a small, tiny amount perhaps for pain and suffering, but not really. This is mostly reimbursements to compensate you. That's why they are called compensatory damages. They are your medical expenses, your lost income, your property damage. So these are to pay you back for what you have lost. You fall on the floor, you break your leg, you go to the doctor, they have to pay for your medical expenses, they have to pay for you to be out of work, they have to pay for, obviously, your Ubers to get around because you can't drive, right? So all of those things that are your expenses. Those are your compensatory damages. Make sure you know compensating. Punitive damages. This is for reckless and malicious misconduct. This is where we talked about that gross misconduct, the gross negligence. This is extra punishment. This is for your reckless and malicious misconduct. It exceeds your simple compensation. It is punitive. It is to teach you a lesson, if you will, for hurting somebody much more than they had to be hurt. So if a judge decides you owe punitive damages, you owe compensatory damages, but it's a hard word for me, and you will owe punitive damages. So you will owe them as an additional amount. To remember punitive, think of punishment. To remember compensatory, think of compensation. So paying you back. Punitive is punishment above and beyond for being stupid and hurting somebody extra. For commercial general liability policies, there are two different kinds. There is claims made versus occurrence. You need to understand the difference. Occurrence is the policy period. Claims made has a different, has a retroactive date. It can go backwards, and it has a retroactive date and an extended reporting period that goes into the future. It is not as common as occurrence. The reason you would use claims made is that it is usually used for things that may not show for a few years. So something that may not appear for a few years. This is going to be a question on your exam. Occurrence is the most common type for commercial general liability policies. Understand that occurrence is by far the most common type of CGL policy. And just the difference, again, between claims made and occurrence. Now that you know occurrence is the most common kind, occurrence happens during the policy period, and claims made gives a retroactive date and an extended reporting period. So if somebody made a claim on a claims made policy, it would have a retroactive date. So it could include claims that happened actually before your policy started. So your policy could start, say, January 1st of this year, but your claims made retroactive date could be from 3 years ago. Even though you didn't have policy with this company then, it would go back. So you just need to understand, really read your material on the difference between claim made and occurrence. I think one of the biggest questions is going to be which one is the most common, but there's probably going to be a couple other questions on the differences between claims made and occurrence, because that's what they're going to want you to know. Okay, moving right into some other commercial insurance. Builder's risk insurance. This can cover buildings under construction, foundation, machinery, temporary structures, equipment used to service the building. I think that is going to be one of the questions. And building materials that are not yet installed. I also think that will be one of the questions. Building materials that are not yet installed that are within 100 feet of the building. Make sure you know that it includes machinery, equipment used to service the building, temporary structures, and building materials, as long as those building materials are within 100 feet of the building. This could also be the twist to the builder's risk question. It could be that it covers additional property not belonging to the builder. Think equipment belonging to a subcontractor, like a mason or one of his guys, right? It's going to cover his equipment and his building materials, right? Additional property not belonging to the builder, but belonging to one of his other guys, subcontractor, as long as it is also within 100 feet of the building. And the limit on that is $5,000. Okay, inland marine. Inland marine is a wide variety of all kinds of things. There are going to be some that are going to be highly testable that I want you to pay attention to. There's other that are going to be not so highly testable, but this includes everything from the common to the weird. So you're going to have a whole bunch of stuff that fall under inland marine. And through your career, I recently wrote a cool espresso machine for a food truck that could go nowhere else but inland marine. They had a bop and needed their fancy pants super expensive espresso machine written, and the only place it fell was under inland marine. So just keep in mind that it can be a lot of weird things go under this. Not necessarily what you might think it's going to be, but it is kind of can be kind of all kinds of different things. So let's get started. Okay, a whole lot of these with inland marine, if you are taking a pre-licensing course, which I highly recommend you do, are going, read all the stuff on inland marine. There's going to be a whole lot that are more testable than others. This is one that is highly tested. A bailee is anyone that controls your property. If they are in the care, custody, or control of your property, customer property, they are a bailee. A lot of things in inland marine are learning just the terminology, right? Learning all the weird insurance words. So a bailee is somebody that is holding on to your stuff. Think of your dry cleaner. You give him your nice clothes and he is responsible for it, right? So he is a bailee. The other person that moves your stuff around is going to be motor truck cargo, right? They move your stuff all around all the time. They are covering your property of others in their possession. So that is a commercial inland marine policy where they are covering the possession of others. When you are talking about truck carriers, there are going to be two different types of carrier forms. This is going to be a test question guaranteed. One of these will be the question, or it'll be asking you what the difference is. They can use one of these two forms. Truck carriers can use the annual basis, where they just have it like we carry all this stuff and they just tell you, or they write it down per year. Some of them don't actually record per trip. They just record all the stuff. Like, hey, we have a whole bunch of stuff, and they just tell you once a year. So they don't actually record every single trip. So sort of depends how big a company they are. Huge companies probably using a once a year policy, right? You know, they're not going to tell you UPS isn't recording every stinking thing that they're carrying, because one, they don't even know what it is inside that package. So think of, you know, the once a year big transit companies, right? Your little smaller, more mom and pop carriers, they're probably recording it per trip. So know those two different carrier forms, per trip or annual basis. Installation floater. This is the guy that comes and sticks in your stove and your fridge and your air conditioner, he and your light fixtures and your ceiling fan. He is going to have a floater that covers him while he's installing that in your house, and it also covers him if he has to come back and do some repair on it because it didn't go right. So that is called an installation floater. That is a very high probability of being tested on there. Like what one covers somebody that comes and installs air conditioners and has to come back, or what covers somebody that has to come back and fix something that didn't go right, you know, that kind of thing. Think installation floater. Sign floater, I don't know if this will be on your test. Could be. This is for signs owned by the business. You know, you got a sign outside. It's got to be covered like fancy sign in case somebody steals it or vandalizes it. Accounts receivable coverage. This is more for if to recreate your accounts receivable. Like if you had a fire and your records were lost. Somebody had to go in and recreate your records to ensure you could still have your accounts receivable. So you had, think of Hurricane Katrina destroying all of your records and going back in and trying to recreate all of that. That would be accounts receivable coverage from inland. Equipment dealer covers. This is for people that sell construction equipment, agricultural equipment, mobile equipment, or any kind of equipment they hold for sale. They have it for all the stuff on their lot. They basically record their inventory once a month. I think the inventory once a month is going to be the test question if you see it for equipment dealers. Jeweler's block coverage. This is for jewelry in stock, but it's also jewelry left for repair, similar to the bailee, but specific to jewelry. But it's also for jewelry in transit. If they had to send jewelry somewhere, like to a jewelry show, so to get stolen out of the, as it was getting loaded into the show or loaded out. So this would be specific to the jewelry business. Just know Jeweler's block coverage, that it is very specific to the jewelry business. Valuable papers coverage. This is for things like contracts, certificates, bonds, and financial records. You don't see this one as much anymore because a lot of these things are now not actually paper certificates. A lot of bonds and stocks are no longer on paper. They are recorded electronically. So you don't see these things as much. But valuable paper coverage is still available as an inland marine policy. Make sure you know it. There will be a test question. I think I already know what it will be. I think it will be this one right here. Valuable papers does not mean money or securities. Money is not included in valuable papers. You cannot insure cash from your valuable papers policy. So they will not give you valuable papers coverage. Obviously, you can't say, oh yeah, hey, and there was 20 grand in there. So, I need that too. So know on your exam if they're talking about valuable papers, which one of these is not covered under valuable papers. If money is there, that's going to be the right answer. Contractor equipment floater. This covers mobile equipment used by contractors. Well, they take it around, tools. Contractors move their stuff all over the place. The guys take their excavators, they go to construction sites, they work on different locations. They have tools that they take all over the place and work on their businesses remotely and on different construction sites. And that is a huge part of commercial insurance. That said, I think this will be the test question. Contractor equipment floater generates more premium industry-wide than any other inland marine policy. Know that, because I think that's going to be the test question, that the contractor equipment floater is the most premium generating policy. Okay, now we're going to get into garage dealers, auto dealers, and other auto commercial policies. But before we do, I want to touch on that there are a few more inland marine policies that we did not go over. I went over the big ones. There is theatrical equipment. There is camera equipment for like professional sports and news companies and stuff like that. I did not go into that because it's kind of nichey and maybe not on your exam. If you have a pre-licensing course, just read all of this stuff. Those will be in there. But I don't want this to be like a 3-hour video, right? Because it'll be really boring. So just kind of go over everything, but know the ones that we went over there and know that, basically, if it is theatrical equipment, it is camera equipment for, a sporting event or whatever, it's covered very similar to all of the other equipment ones. It's, let's say with the coffee machine I wrote, right? They're covered as a separate policy for the business, and it's written as a separate inland marine policy. They can move it around however they want to, and it's unique to their sort of industry. So let's get going on commercial auto. So garage dealers, auto dealers, and commercial auto policies are all separate things. Garage dealers and auto dealers are not part of commercial auto. They're their own little things, right? They're doing their own businesses. Commercial auto is you using your truck for your commercial business. You're not selling cars or fixing cars, okay? So we've got fixing cars. He's got garage keepers insurance. This is insurance for you damage somebody's vehicle. You held it in your shop burned down. You have to cover that customer's car, and or if it got stolen from your lot or from inside your building, or God forbid you had vandals or something happened overnight, like you were replacing the engine, say, it's a multi-day job. You left it and vandals came in and spray painted all the cars. You would have insurance to cover all of the damaged vehicles that were damaged on your business premises. Commercial auto, I'm actually going to do a separate video on, but just going to touch on it real quickly here, just so you understand. There are going to go into some things on your exam that they're going to get into some specifics on these numbers. You just have to understand that you're talking about basically any autos that you own, autos your employees own, autos that you hired, non-own autos. So those are going to be cars that basically your some of them are your employees drive, employee owned autos. You can have separate policies for that, like a ENOL policy. So there are a lot of different policies for commercial auto. Going to make a specific video just for commercial auto because we're getting a little long. We're already at 45 minutes. So going to put a pin in commercial auto and put that in another video. Okay. Farm. I don't think you're going to see farm in your commercial auto coverage. I think you're going to see more questions on your exam about what is not farm in your homeowners, and possibly in your flood insurance and things like that, about what parts of your coverage are not included, and those being farm. But farm is broken down into farm property, farm liability, their equipment, and their livestock. Because a farm is both a business and a home at the same time, it is a unique sort of structure, right? It is unique insurance. You are getting commercial property insurance, commercial liability, home insurance, and a business insurance all rolled into one package. So you have to, it's kind of a unique thing. I do not think you're going to see a lot of questions on how to write farm insurance. Just know that it is sort of a unique 4-in-1 kind of thing. I am adding a few questions here at the end that I am positive will be on the exam. So let's go into those. They are not necessarily commercial per se, but I'm going to call them commercial adjacent. Dram shop liability. Almost everybody I know gets dram shop liability. It is a liability of bars and restaurants that if you serve somebody and they are drunk and they drive, you will be sued. So if they cause an accident, you need to have liability insurance to cover drunk people driving. So it has a weird old-fashioned name, dram shop liability. It will probably be on your exam. I don't know a lot of people that haven't had it on their exam. So make sure you know that one. We hit it earlier, way earlier. The waiting period, business income insurance, 72 hours. Make sure you know that. That is probably the question about business income. It might be the only question about business income. Mysterious disappearance. Doesn't matter what policy you're talking about with crime. Mysterious disappearance, not covered. If you get this one wrong, I'm going to be disappointed. Valuable papers does not mean money. It'll be on there, I promise you. Somewhere there will be a question about what valuable papers is, and it does not mean money. Okay, this is commercial adjacent, not really commercial. This is your professional liability insurance. This is you doing a poor job as a professional, lawyers, doctors, insurance agents, right? You can be sued for doing a poor job at being a professional. You give out negligent advice, you will be sued. You give somebody the wrong policy, you don't set up their policy, you will be sued for errors and omissions. So again, not commercial liability, professional liability, but errors and omissions insurance, I promise you will be on the exam. You make a mistake as a professional, lawyer, accountant, insurance agent, you make an inadequate work, don't do a good job, negligent, you will be sued. That is what you have errors and omissions insurance for, and that is professional liability. The other guys who need professional liability, doctors, right? They need malpractice insurance. So malpractice insurance protects professionals from liability for negligence and errors, and a lot of times is going to be your doctors. This will be a question on your exam. This is one of the only times the insurance company needs your permission to settle. They can settle an insurance claim without your permission for your car insurance. They can settle a claim with somebody suing you on a lot of claims without your permission. They cannot settle a professional liability claim without your permission because it involves your reputation. So they cannot settle like a malpractice claim. They cannot settle, a professional liability claim because you're basically admitting that you're not a good accountant, you're not a good lawyer, you're not a good insurance agent, right? So they have to have your permission to settle a professional liability claim. That will be a question on your exam. So I hope you didn't mind me including a couple that weren't exactly commercial, but were kind of close, and just a couple reminders on which ones are definitely really, really highly testable. Remember, we have a few printables, including the glossary. That's going to be really helpful for your exam. Be sure to check out all of our other videos. I wish you the very best. Thank you so much for all of your wonderful comments. There is nothing absolutely better than coming home from a day of my insurance job than finding out one of you passed and decided to share that with me in my comments. That just really touches my heart, and it's really thank you so much for including me in your journey. I hope these help you pass, and again, thank you for including me in your journey to become insurance agents. Wishing you the very best. See you next time. Bye.